Money is something we use every day. It's a part of our daily lives, whether we realize it or not. We use it to buy things we need, like food and clothes. These are essential items that we can't live without. We also use it to buy things we want, like toys and games. These items bring us joy and entertainment. Money is important because it lets us trade for the things we need and want. It acts as a medium of exchange, making transactions smooth and efficient. Imagine a world without money. It would be chaotic and confusing. How would you get what you needed? You might have to rely on other methods to obtain essential items. You might have to trade something you have for something you want. This is called bartering. Bartering can be complicated and time-consuming. Money makes trading much easier. It simplifies the process and saves time. It gives everything a value that everyone agrees on. This universal agreement is crucial for a functioning economy. This makes it simple to buy and sell goods and services. Markets thrive because of the ease of transactions facilitated by money. Can you imagine trying to trade a cow for a loaf of bread? It wouldn't be easy. Money solves that problem. It provides a convenient and efficient way to conduct transactions, ensuring everyone gets what they need and want.
Long ago, people didn't have money. They used a system called bartering to trade goods and services. Bartering meant trading something you had for something you wanted. For example, a farmer who had extra wheat might trade it to a shepherd for wool. This system worked well for small communities where everyone knew each other. However, bartering had its problems. What if the shepherd didn't need wheat? What if the farmer wanted something else? Finding fair trades could be difficult and time-consuming. As communities grew larger and more complex, bartering became less practical. People needed a better system. The solution to the problems of bartering was money. The first form of money was coins. These coins were often made of precious metals like gold and silver. People valued these metals because they were rare and beautiful. They also lasted a long time. This made them a good store of value. The first coins appeared in Lydia, a region in what is now Turkey, around the 7th century BC. These coins had standardized weights and values, making trade much easier. Coins quickly spread to other parts of the world. They became the dominant form of money for centuries. While coins were a major improvement over bartering, they were not without their drawbacks. Carrying large amounts of coins could be heavy and inconvenient. To address this issue, paper money was introduced. Paper money was initially a promise to pay a certain amount of gold or silver. The first paper money appeared in China during the Song dynasty in the 11th century. It was much lighter and easier to carry than coins, and it quickly gained popularity. Over time, paper money evolved. Instead of being backed by gold or silver, it became a fiat currency. This means its value is based on the government's guarantee rather than a physical commodity.
Section 5. Money in the modern world. In the modern world, money takes on many forms. It is not just limited to the physical coins and paper notes that we are all familiar with. We still use coins and paper money, but we also use other forms of currency. These new forms of money have evolved with technology and the changing needs of society. These include checks, debit cards, and credit cards. Each of these methods offers a different way to access and use our money, providing convenience and security. These forms of money are all based on the same principle. They represent a certain value that we can use to make purchases. Whether we are buying groceries, paying for services, or making online transactions, the underlying concept remains the same. Modern economies rely heavily on money. It is the lifeblood that keeps the economic engine running smoothly. It facilitates trade, allowing businesses to buy and sell goods and services efficiently. Without money, the process of trade would be cumbersome and slow, relying on barter systems that are far less efficient. It also serves as a unit of account, providing a common measure of value for different goods and services. This standardization is crucial for comparing prices and making informed economic decisions. Money also acts as a store of value, allowing us to save our wealth for future use. This ability to save and accumulate wealth is essential for long-term financial planning and stability. Section 6. Digital money. In recent years, a new form of money has emerged: digital currency. Digital currencies such as Bitcoin and Ethereum are entirely digital forms of money. They are not issued by governments or banks. Instead, They rely on cryptography to secure transactions and control the creation of new units. Digital currencies have the potential to revolutionize the way we think about money. They offer several advantages over traditional forms of money, such as lower transaction fees, faster processing times, and increased security. However, they also face challenges, such as regulatory uncertainty and the potential for volatility.
Section 7. What makes money valuable? You might wonder what makes money valuable. After all, a dollar bill is just a piece of paper, and a coin is just a small piece of metal. The answer lies in trust and acceptance. Money has value because we trust that it will be accepted as payment for goods and services. This trust is based on the belief that others will also accept money as payment. The government plays a crucial role in maintaining this trust by ensuring the stability and reliability of the monetary system. Without trust, money would be worthless. It is this shared belief in its value that allows money to function as a medium of exchange, a unit of account, and a store of value. Throughout history, different forms of money have been used, from shells and beads to gold and silver. Each of these forms of money was valuable because people trusted and accepted them. In today's world, we even have digital currencies like Bitcoin, which rely on a decentralized system of trust. Central banks and financial institutions work tirelessly to maintain this trust by managing inflation, regulating banks, and ensuring the overall health of the economy. Every time you use money to buy something, you are participating in this vast network of trust and acceptance. This network extends globally, allowing for international trade and economic cooperation. As we move into the future, the forms of money may change, but the underlying principle of trust will always remain the same. So, the next time you hold a dollar bill or a coin, remember that its value comes not from the material it's made of, but from the collective trust and acceptance of people around the world.
Section 8. Understanding money today. Understanding money is essential in today's world. Understanding money is essential in today's world. It affects our daily lives in countless ways, from the way we shop to the way we save for the future. By understanding how money works, we can make informed decisions about our finances. We can also better understand the complexities of the global economy. Money is a powerful tool. It can be used for good or for ill. By using our understanding of money wisely, we can help create a more equitable and prosperous world for everyone.